Garret, you ready to hit that button?
You're live. You are live.
Okay, everyone. Welcome to our VIG webinar. My name is Chris, as you can see at the bottom of my screen here. My co-host, Ryder, will be speaking later as well.
Hello.
Hey, so first of all, there's many important things that you should look at when you're picking a market to buy a property. And when we say property today, we're going to be mainly talking about multifamily properties or apartment buildings, something that, I know many of you are interested in. Even though a lot of the underwriting techniques also apply to other types of property, today we're going to be talking about apartment buildings. So when you look at buying an apartment building, there's many things that are important and that you should look at when you pick your market. You look at the metro, the neighborhood, the crime rates, the tenant laws in the state that you're investing in, all that sort of good stuff. Very important stuff. But then let's say you've picked a market that you are interested in investing in, and you start looking at some properties. How do you know what the value of a property is? And not the value that the broker says it has, but the real value that the property has. And how do you know if the property has an upside? Because we all want to buy a property that's under market. That's what you're trying to find out. And that's what Marc Rutzen is going to focus on tonight. Because tonight we have Marc Rutzen as our presenter. He will teach us how to do financial underwriting on a property. Because properties in commercial properties are valued based on their income and not based on their, not necessarily based on comps. If you have an equal number of unit property right next to it, that might sell at a whole different price. So finding out what a property is worth is really important. Marc Rutzen will during his presentation, he will use Enodo. Enodo is an AI-assisted multifamily underwriting platform that he invented, and he still runs it as its CEO today. The company has grown a lot, and I'm sure Marc will teach us about that a little bit too. I think it's quite an interesting story. However, the methods that Marc will show us, as far as how to underwrite a property, they do not necessarily need any particular tool. I mean, you can underwrite properties using Excel sheets. You could even do it on the back of a cocktail napkin, if you can get a hold of a cocktail napkin, that is. So anyway, Marc will take us through all the steps to underwrite a property using Enodo. Like I said, you do not need Enodo or any other particular program per se, but what you will see is how Enodo make things much, much easier when it comes to underwriting. Enodo is not free. I bought it myself a year ago. That's how I first got into contact with Marc. And I've used it to underwrite deals ever since. And I find it very easy to use and very helpful because it pulls in a lot of information that would take me a long time to pull that in for myself. So if you have any questions afterwards, I'm sure you're going to be very interested in it. If you have any questions from a user perspective, I'm not selling this, I'm not getting any kickbacks on any product that Marc does sell. However, if you're interested, what I think about it from a user perspective, feel free to reach out. With that, let's turn it over to you, Marc.
Yeah, absolutely. Thanks for the intro. I really appreciate it. I'm going to share my screen here. Can you guys tell me when you're able to see? It should be the Enodo website. It should have a video playing in the background and some text in the foreground. Can you guys see that?
Looks familiar. Yep.
Perfect. Okay, so thanks again for the intro, Chris. Enodo, if you guys have not heard of it, is an AI-assisted underwriting platform. And what we do is kind of twofold, right? On the one hand, it's workflow automation. So we're using AI to help you parse rent rolls in T12 operating statements very quickly and efficiently. And if you guys have underwritten a bunch of deals under the whole, look at 100 properties, make offers on 10, close on 1 sort of methodology, you know that it can be pretty labor intensive to look at those 100 properties, right? To dig in any level of detail can be very difficult. And what we do is we provide tools to help you dig into the financials of those properties very quickly, parse your data, get it into your template, and then do your analysis. Now, as we do that, we actually provide a pipeline of data from all the people that are uploading their deals from all over the country, and we are able to train on that data that they're uploading continually and use it to predict how properties should perform relative to the market. So rent, operating expenses, and ultimately the asset value, we can predict from that pipeline of data that we've built up. Now, I'm going to show you both sides of the platform, and I'm going to start with the data processing side. So let me show you here from the main screen. So this is our multifamily underwriting tools. This is when you have a deal at hand, you have a rent roll and an operating statement, and you want to quickly parse them and get them into a template to do some analysis. Let's start with the rent roll assistant tool here. Now, what this does, I go and I'm going to find a rent roll here, and I'm going to show you what the rent roll looks like beforehand. So if I open this, I see there's a logo in here that's kind of pasted on. There's, you know, a bunch of different lines for each of the different units. There's charge codes broken out under each of the units, and the tenant names are taking up 2 lines. They're kind of staggered with the line next to it. Like, if you guys have seen this before or anything like this before, you know that if you were to convert this to Excel, this would have like a billion columns in between these two. It would have, you know, this would be pasted together in one cell that's merged. This would be not on the right row. It would be a different row in Excel. There would be all sorts of issues to make a long story short. And this is 9 pages, so you'd have to deal with 9 pages of issues parsing the data before you can do any sort of analysis. What we do is we take that rent roll or operating statement, we do it with both, and we split all the information out of that PDF or Excel file, and we put it into a format that you can actually do real analysis on very, very quickly here. So you see, we pulled out the floor plans. It did a little bit of a load there. It pulled out each of the floor plans, the number of units associated with each, average square footage, market rent, contract rent, and the range of each. And then it pulled out the beds and baths too, because sometimes you can pull that out of the floor plan. A lot of times you can't. You know, if they have A1, B1, C2, that sort of thing, can't pull it out. In this case, it's 1x1, so we know it's 1 bed, 1 bath. So I've got my floor plans broken out very cleanly. I've got my charge codes broken out. It's going to pull all these out of the floor plans. It's going to tell me the units with each charge code, the percent of the building that represents, the total dollar amount, and it's actually going to categorize them using machine learning. And I can see utility, well, that's clearly RUBS, 95% certainty. Now, if there's something that it's not clear about, like you guys would not be clear, what is this? If you were to look at a rent roll and see this, what does this mean? Well, what our AI is going to do is going to actually comb through all the files with similar charge codes that have ever been uploaded from every single user that's uploaded a deal every time they've uploaded a deal. It's going to train on that and tell you 31% of the time that's going to fall under RUBS. 15% they're going to categorize as subsidy, and 14% it's something else. So in this case, I'm going to go with RUBS because that looks like the biggest category. And in this case, I've actually added the wisdom of the crowd to categorize effectively what those charge codes are. That's the whole theory of Enodo. It's using the wisdom of the crowd to help you underwrite more effectively by distilling all that wisdom with machine learning. Here you can see it's doing the same with occupied and vacant units, taking out those charge codes. And it's going to allow you to, if you have affordable or renovated units, call them out here. So in this case, just for illustrated purposes, I'll say that 2x1C is renovated, just for an example. But you can add any tag that you want to this and slice and dice in more granular detail. So I save. And now in a few short steps, I've actually got my in-place rent trending over time. I've got the ability to break that out by floor plan and look at price trends over time. I've got new leases signed each month and this actually is the old rent roll, so you see older dates here, but I mean, this will work with anything that you guys have that's a PDF or Excel format. And you can see the lease expirations, and in this case, I can see that, you know, per typical leasing schedules, June, July, pretty high leasing activity, and 13.41% of my leases, or 13% of the total revenue, is going to turn over in June. That's important to know, because you need to come up with your business plan for the property. You need to understand what you're going to do and what leases that what you're going to be able to achieve in terms of rents when those current leases turn over, which they often do after an acquisition. So right off the bat, we've got some very useful graphics. We've got all the data behind that here that you can slice and dice in these different tables, as well as breakouts of the floor plans and the different charge codes and everything, as well as, and this is, to me, this is the most appealing part of the whole platform here, clean data that you cannot get without tons of effort. If you're taking just a PDF and you're trying to parse it manually, this is the best part. And I started this as an analyst, right? I started in real estate doing analysis of rent rolls and T12s myself, parsing them and getting this data into Excel. This is really hard to get. And for me, this is just a beautiful thing to be able to convert what is a dirty rent roll into really clean tabled data that you can do statistical analysis on. So that's the rent roll side. Now, what's even cooler is you can do this for operating statements too. And so say you're approaching a deal and you've got a few years of historicals, and you know, oftentimes you might not, you might just have a T12, but sometimes you have a few years of historicals, and certainly the lender, they're going to ask you for that when you go to apply for a loan, and you're going to have to get it anyway. What we enable you to do is take 4 years of financials. So I've got my T12, it's an Excel file, my 2018, 17, and 16. 16 happens to be a PDF. Again, it doesn't matter if it's PDF or Excel. I'm going to load those all simultaneously, and it's going to prompt me. Now, I've uploaded these before, so it's going to prompt me and say that, hey, you've uploaded these before. Do you want to start with what you did previously? It's a smart system. It's learning from your activities so that you don't have to duplicate efforts. So when I load this, it parses all the documents. It says, hey, there's an issue with the 2016, the PDF. Oftentimes, PDFs can cause issues when you parse them. If you use off-the-shelf PDF parsers, free stuff online, it's going to cause issues. What this does is it actually uses the intelligence from all the other documents that it's analyzed, and it tells you when things are off. So in this case, any parser that you look at is going to produce errors like this. They all work in a pretty similar way. But what we do is we flag them. We draw your attention to it so you can actually fix that issue. We say, hey, the subtotal that's listed in the document is different from what was aggregated from all these line items. And you'll see, you know, if you guys know, in the bottom right corner, we're actually doing, it's very much like Excel. We're actually tabulating these and summing them, averaging them, and counting them across the different columns, right? So this environment should be very familiar to you guys because it's going to function very much like Microsoft Excel. When I get down here, I see, hey, there's one anomaly left. I fixed one. There's one left. It says, oh, there's a page number in there, so it's not tabulating correctly. And then I fix that, and it's going to, you know, basically fix the issue across here. And in this case, oh, it's off by $1. So it's a rounding issue. So it's essentially the same. The AI knows that. It's not going to say, hey, you're off by like a nickel. So it's not right. It's going to say it's off by $1. So it's not, you know, a significant deal. So there I've corrected the anomalies. I confirm. I say, yes, I'm good. I've got all green, so that means all my documents are good. I come through, I'm going to confirm expenses and the line that represents NOI in the file. So this is important for predicting what category different line items fall into. So it says the first line of expenses and where the NOI is. This is right like 99% of the time, so you usually just click through, but we like to let people confirm. And then once you're done, you've got your 4 operating statements. You've got your T12 and you've got your 3 historical years. And you have something very valuable here because you've got the ability to detect outliers in these orange cells. So as I'm going through here, you know, if I'm underwriting this is a sea of numbers. I might not see something that really jumps out at me. I might, you know, if I'm an experienced underwriter, maybe I will, maybe I won't, you know. Sometimes people miss stuff like this. But in this case, in particular, cable TV expense, I've got, you know, 300s all around, and then all of a sudden, I've got like almost 8,000 coming in this particular year. You know, what's going on with this? That's something I want to draw attention to. And so, you know, I can see here what we're doing. We're taking 2.5 standard deviations from the mean, 20% difference from the mean, and absolute amount greater than 500. So we're not going to, if it's like $5 and every other month it's been $0, it's not going to flag anything. In this case, that's something I should really look into, and I can add a comment here and let anyone on my team know that that's something to look into, that particular line item. So that's one very valuable thing to help you kind of draw attention to the due diligence items in your operating statements. The other is this auto categorization feature where I can say, hey, I want to categorize the NAA standard of classification or categorization. It's actually going to automatically make an apples-to-apples comparison across all 4 documents. It takes every line item, drops it into the appropriate bucket based on the way NAA would underwrite and based on how every one of the people that uses the platform allocate these line items. So if it's something that is different from how people would typically do it, or something where, you know, it's divided, so half of people do it one way, half of people would say this is utilities, half might say this is admin, it's going to tell you that. It's going to tell you the certainty with which it falls into each of these buckets. And if I change it, it's going to highlight that and let me know that I made that change. So I click next. I'm going to go through the documents here. It's going to tell me when, if you guys note at the bottom here, when the computed NOI from all these line items actually matches up with the operating statement in the parsed numbers from the document. I click save, and it's actually going to put this in 4 years of historicals all the way across. It's going to process and put this straight across. So I've actually got, you know, in this case, 3 years of historical operating expenses side by side. And I can actually see not only the GPR, which is what you often get from, you know, a broker, but I can see the net rental income that I'm getting on this property. And in this case, it looks like the GPR trends up a little bit, but at the end of the day, you lose to vacancy, collection losses, and concessions, and your NRI, your net rental income, is not all that different across the few years here. So that's the kind of information you want to get to when you're analyzing data. You want to understand the income and expenses of your property very quickly. And, you know, aside from my talking through everything here, you guys could do this yourselves in the platform in just a few clicks in a couple minutes. So it really streamlines that whole process of analyzing a large volume of deals. So that's side one of the platform. That is document classification and document analysis. The other side is once you've actually got a deal and you've loaded your documents, you can compare yourself to the market and kind of see how your property sits relative to the market. So what we do here, we pull this information from public records. So this is, you know, we'll get this from county assessor. We'll get it from the city's website, in this case, the city of Chicago, if you see on the map to the right. We'll pull the number of units from those records. We'll actually generate an estimated market value with our automated valuation model. We will find historical trends going back pretty substantially far. I mean, this is surveying the property website, how they've listed their rents every week, going back for like almost 3 years now. You know, we're going back to earlier 2017. We're surveying those rents. We're showing you the long-term trend of those rents, so you can make a determination of what you think rents will do in the future. And we're doing a few other things here. We're telling you what amenities the property has, how frequent those occur in the market, and what the premium is associated with having each of those amenities. We get this through statistical analysis of, in this case, 140,000 listings. So we took 140,000 recent listings, basically did advanced regression analysis on them, and isolated the impact of each variable, and then we tell you that here so that you can know, hey, if I do a fitness center, say this didn't have a fitness center, say I take that off. Well, look what's happening to the Enodo rent here. It actually declined. This is saying now the hypothetical version of this asset does not have a fitness center. I've just changed the composition of this building in the interface to see how it would perform under that set of conditions. It's a scenario testing platform. So I've got a fitness center. It's 20% of the market has it. It's telling me a 2586 premium plus or minus 350. I toggle that on as an amenity, and my Enodo rent is going to go up to show that I have that amenity in this hypothetical model of the asset. This is how you can test value add scenarios. You can optimize what you're going to do to the property based on not just what the premiums are, but how frequent it is in the market, how many properties have it. And this is a big list. I mean, there's a lot of different amenities on here that you can toggle and see what the impact would be on the Enodo rent, and actually see how you'd perform if you were to offer those amenities in your property.
Hey, Mark, this is Chris. Just want to interrupt you there for one moment. Just to make sure that everybody understands that when you say Enodo rent, that is the rent that Enodo suggests that the property would rent for.
Absolutely. That is our
and that doesn't come from magic.
Right. Well, I mean, it may seem like magic, but honestly, it's just collecting a lot of data and analyzing it through a statistical lens. It's doing the same thing that you guys would do if you were aggregating a ton of data. So say you went and called on every property in this market. Every single one of these dots you went and called on. What would you do to isolate the value of amenities? You would do probably what an appraiser does. You would take properties that have and don't have that amenity, and you compare the rents, saying everything else counts. You kind of filter them down. You'd say this is very similar year built, very similar number of units, very similar location, same neighborhood. You know, they've got all the locational amenities exactly the same. Okay, this is apples to apples. Now, this one has a pool, this one does not. What's the impact? What is the differential in rent? We're doing that, but we're doing it with 140,000 listings over hundreds and hundreds of properties in this market to generate that analysis. And that's happening all the time, instantly. So, you know, you guys can certainly do it. I mean, if there are any statisticians in the audience, you can definitely do it yourselves. It's just a little bit faster if, you know, someone else is aggregating the data and analyzing it for you. And that's kind of the value that Enodo provides. Real quick, the other side of that, you know, we understand that you're not just going to say, okay, Enodo's done statistical analysis, I agree with that rent, right? We understand that intimately. So what we do is we surface comps that we actually use to generate those predictions. We surface similar properties in the market, and we tell you what they're actually charging in rents, what their physical attributes are, and help you compare them in terms of statistical similarity to your subject. So here we've got the Uptown Regency. This is our subject property, composed very much like a standard appraisal. And then I've got to the right different comps that I've selected. down here, we've got all the similar properties that you see. Everything that's not in orange over here is appearing down below. This is everything that Enodo has determined is statistically similar above a benchmark of typically, you know, we aim for like 40, 50% similarity. Below that, it starts to drop off, and those won't really show up as similar properties. If you look at this, you're going to see stuff that is very statistically similar, and you're going to select it as a comp, and then it's going to shoot up here, and now you can see it went from 7 to 8 comps. And now I've got my rent survey done. I've got every property that is comparable to my asset selected in this market. I've got an analysis of each, and I can see, you know, I want to compare my one beds. You guys would do this if you were pitching this as a syndicator to investors. You would say, man, how do I justify my rent is reasonable for the market? Well, my one beds, look at all the comps. You're right dead center in all the comps. And look at my two beds. Oh, I'm actually at the low end. You know, that justifies my my rent bump that I've said that I can get for the two beds in this market because my analysis is spot on. I can probably move it to between what 5051 Kenmore and the 940 West Winona apartments get. And right now it's only 1680. I'm probably going to get 1825 for my rents. That's where my rent bump's going to come from when I manage this effectively and offer similar amenities to those comps. So this is how you craft your argument and your business plan for your asset, and you come to your investors with a more honed argument and detailed statistical support for what you're proposing. The last component of this, and this is the last really interesting thing in Enodo, is this benchmark operating expense comparison is driven by everyone who's uploading T12s, as you saw on the previous screen, everyone who's uploading T12 operating statements, everyone who's integrating their property management portfolios, which you can through the Enodo account. You can actually load your whole portfolio. We've had some pretty big people update their portfolios and integrate with Enodo, including Mid-America Apartment Communities, Lennar, one of the biggest home builders in the country. They also have a big multifamily arm. Lennar has integrated their portfolio. One of our first users. We've had huge lenders across the country. Obviously now, after the acquisition, I mentioned this before, Chris, we've got Walker and Dunlop now feeding data from their servicing portfolio into this. This has only gotten more and more robust over time, but we're predicting every single line item that you would underwrite to as a function of all the similar expenses in the market. So properties that are similar in terms of year built, number of units, physical location, unit mix, net rentable square footage. We're taking all these variables into account, and we're basically in a sophisticated way, we're averaging their expenses. Same thing that you guys would do if you had, you know, 10, 50, 100 expense comps. You would take all the stuff that's similar and you'd average it, and you'd say, okay, that's where my expenses fall. We're just doing the same thing. We're doing it with an algorithm, though, so it's a lot faster. It's updated every single week. So you come in here and you can see gross potential revenue, see vacancy loss, concessions, collection loss. You've got R&M, contract services, salaries and personnel. And if I say to myself, hey, wait a second, I've got the financials for this asset, which you can load over here, you can import from what we did in the previous interface. But say I've got utilities, and you know, at this property, I'm at $1,000 per unit for utilities. Well, no, I'm 38% below, or 38% above, I should say, where I should be for the budget for this property. It's automatically calculating here an annual value. And I know if I buy this asset, I could probably reduce my utility expenditure substantially. So this could be a real value add when it comes to the expenses. And if I compare the rents, you know, this could be a real value add when it comes to the rents. I actually could generate substantially more in some cases. So this is the type of analysis that you do. once you've got an asset that you want to look at in more detail, you want to compare it to the market, just like you guys would manually. But what we do is we help you do it in a much more streamlined way and really get insight as quickly as possible. Last thing, because I know I've gone on for a while here, all this is exportable. So there's an Excel export in the upper right. I exported this right before I started the demo here. So you've got your comps side by side. All the stuff that I selected for this asset, I've got property name, the address, I've got the rents, the unit mix, the rents for different unit types. I've got the amenities side by side. So this is, a lot of brokers will spend a lot of time saying which amenities the subject has versus each of the comps. This is done for you. It's all pre-populated, so you can put this straight into your OM. You've got your amenity premiums. So you've got the stuff that you have, and then you know the frequency, premiums, and the margin of error on that. You've got your market analysis, where you've got the same sort of graphs that I was displaying in the interface. They're all formed for you here, so you can put this into your OM. You've got all the data from all the similar properties that we surfaced in the market. This is not just the stuff you selected as comps, but this is everything. And it shows you which ones you selected, but it's got all the rest of them too. So technically, you can take this and do your own statistical analysis. I wouldn't, you know, it's probably not the best use of time, but you could if you wanted to, because all the data is there. You've got historical rents for the property. When there are concessions, sometimes there are, but a lot of times there aren't, so oftentimes this will be blank. And then you've got the unit mix that feeds into the model over here, which is probably one of the cooler parts of this, is that this is all feeding from Enodo's underwriting and your underwriting side by side, and you can compare the two, and this will all feed into not just T12, or not just a financial model or a pro forma for the property, broken down monthly over here too. I mean, this is every month rolling up into the annual, but this is also going through a financing waterfall, where you're going to see, even if I have like such things as like a second mortgage and then a takeout of the first mortgage, I can model that here. So say, you know, I want to do in year 4, I want to do a takeout. I've got my refi in year 4, and then I've got my new cash flow, and then I've got sale of the property in year 7. That's going to flow all the way through to the partnership returns waterfall structure. So I'm actually modeling, and I can change my pref, I could change my my terms here and see, and it's going to update the terms for what you would write in your OM. It's going to update that automatically here, and it's going to flow through to the model, all of that, everything that you change, no matter what, you know, convoluted, sometimes convoluted waterfall structure people come up with, you're going to be able to model it here and see what the returns would be in any case, what you would get and what your investors would get under each scenario. So that is really the value of Enodo, and I know I've talked you guys' ear off. I really appreciate your time. With that, I'd love to open it up to any questions you guys might have.
Well, actually, my first question, Mark, and this is Chris, can you scroll down this screen and show people the cap rate part of it? Because I might have missed it because I was looking at my other screen at one point, but that's one of the, I find it a pretty helpful feature. Yeah, right on this screen here. If you scroll down, the cap rate sensitivity. And can you explain a little bit as to why that is super important and what it does and how it works?
Yeah, so what we do here is we actually use everyone's input cap rates and the data that we collect on closed transactions. So you notice you have to input something first before you get a cap rate out. So you have to put your estimate of what the cap rate is. We're using closed deals, and we're using the wisdom of the market again to tell you what your the value of your property would be if you were to capitalize that NOI at the cap rate you said, and then what Enodo's, and you can see in green what Enodo's predicted cap rate is, right? So you're not going to sway it by coming in here and putting in like a super low cap rate 20 times. It's not going to change the model. There's too much data flowing into it. But over time, 100 people come in and say the cap rate is 4.75, and then a couple come in and say it's 5. Okay, it's going to trend toward 4.75. And we've got that user base to kind of to help the model train and get better and better over time.
So this basically shows you, and I think this kind of helps tie it all together. I mean, we started out by importing the rent roll to determine the income. I must say, I had varied success sometimes with importing rent rolls myself, but even if you put it in manually, it goes pretty quick. What we did then is we imported all the expenses. Then we looked at comparable rents and we fine-tuned the operating statement. And this is kind of the way I see it, the last piece of the puzzle, where you tie it all together and says, okay, based on the income and the expenses we put in and what we forecast, we've come to an or predicted net operating income. And then by saying, okay, so what's the cap rate in that market and what does the market think that the cap rate is in that market, you can kind of determine what the property is actually worth or what it's going to be worth after you're done making your improvements. So in that case, you don't put in the historical expenses and the historical income. You put in your predicted income and your predicted expenses. So that's what I wanted to make sure that people understood, that this is kind of like the final piece where you say, okay, we've put in all the other information and that's nice. But now, you know, what price tag can we put on this property as it is today? And what price tag do we expect to put on there when we, you know, have it operating the way we want it to? And there is, I think this comes in handy. And you can also forecast here what would happen to the value of the property if, let's say, the market tanks by about a point. How much would, yeah, so let's say you're thinking, you know, I'm going to exit in 5 years. What happens if the cap rate is 6? What happens to that $26 million value? Like, how much will that drop by changing that cap rate? And that's what Marc just did. He changed it to a to 6. So now you can see, if you decompress that cap rate a bit, how big the impact is for you and potentially your investors. And I think this sort of stuff is really helpful, because now you can basically tweak the model and you can say, what if I, you know, can get cheaper insurance, or what if I could save some money on my utilities? And you can start tweaking it, and then you scroll down to the bottom, and then you can see what that tweak, for example, implementing ratio utility billing, what I just did on a multifamily that I own. You can see what that tweak, what difference that makes in the market value of your property based on the current cap rate or on the future cap rate, if you want to guess at that. I hope that makes sense. Sorry for the interruption there, Marc, but I think that this is really important, as it ties all the other elements, the importing of the rent roll for the income, the importing of the expenses to get to the NOI and the comparable rents. And then, you know, it ties it all together, and through the operating statement, it flows back into the ultimate question as I see it. And that's, what's this property really worth and what's it gonna be worth?
Right. No, absolutely. That's a great point. And, you know, I've demoed this so many times. I miss some stuff at some points, but that's a great point. Ultimately, that's what you want to figure out, is what you're going to buy it for and what ultimately you're going to sell it for and what you're going to get along the way. Mm-hmm. And just kind of flow back to today is what that property is worth.
Yes.
So one other thing, mm-hmm. you know, I'd like to tell everyone that this is not just Chicago. So this is, you know, everyone always asks me, oh, what markets do you cover? You know, we cover every market. So if I want to go to like Boise, Idaho or something, right? Mm-hmm. It's going to cover every market across the country. And we've got really robust data and the filterability here. So if I want to go, like, say,
I like it. It starts in 1776.
No one notices that.
I noticed that before too, and I thought that was a very nice touch. You know, none of that colonial stuff.
That's one of those Easter eggs that barely anyone notices. They're like, that's kind of weird. Maybe it's a bug. No, it's the birth of the U.S.
Yes.
Right? So, you know, you can filter here. You can filter by year build, number of units, and you can kind of hone in and kind of see how different properties are performing. And not always will we have a ton of data on them. You know, this is because it is public data, so sometimes it won't be super robust. Other times it will be. You can quickly see what we have on the asset.
Actually, that brings me to one of the questions that one of our attendees just asked. I cannot see his name in the chat window, but he is asking, what data sources do you use to collect the closed and sold transactions information?
Yeah, so we've got one benefit that is really unique to us is we have the actual data for the closed transactions and the expenses as well. So the servicing portfolio of Walker & Dunlop, it's like 5,000 properties.
Can you explain a little bit for the people who are maybe unfamiliar with Walker & Dunlop, what that company does and what kind of volume they do?
Yeah, so Walker & Dunlop is the like fourth or fifth biggest lender for multifamily properties in the country. Right. So, and we're quickly overtaking. We're moving up those ranks to be, you know, top 2, 3, and soon we're going to be number 1 because we're on a tear here. And the technology that Enodo has brought to the mix has helped just turbocharge everything that we're doing to make these loans. But Walker & Dunlop, they service portfolios of multifamily properties across the entire country, and they've got a servicing portfolio of 5,000 assets that are continually every quarter providing updated financials that we're loading into the system, not just our system, but every component of what the business does. We are taking that data, we're training on it to predict operating expense benchmarks and current property values. But along with that, the lender's got every bit of data on the transaction. So we've got every single closing that has occurred. We know exactly what it closed at because we made the loan on it. And then we know exactly how it's operating financially, right? So we take that data and we know what the cap rates are. We know what the income and expenses are, and we use that to make more accurate predictions. That still is just one component. What we've also got, we've integrated with all of Fannie's data and all of Freddie's data. So every GSE loan that's made nationwide, going back to like 2009, we've got in our database. And they're updating every single time financials are submitted. We're taking that and pulling it into what we call our Galaxy database, the whole galaxy of multifamily loans. And we're using that to inform our predictions. So that before, when people used Enodo, it was mostly public data, and in this interface it still is. This is primarily public data. This is from like websites and listing sites. But when you look at the operating expenses and now the property values, that's coming now primarily from actual servicing portfolio data, which is where we've got.
And I must say, as a user, to be honest, that is often surprisingly accurate. Like, because I know, for my own property, I know, of course, what the actual expenses are, and you know, I can see the Enodo column as well, and oftentimes that draws pretty close to the actual reality. I actually have a follow-up question here from Henry Yuan. He's asking, so what data source do you use for your rent comps? And like right now we're looking at things that say market rent for a property that we just randomly clicked on in Boise, Idaho. How does it know, and how often does that get updated? Basically, how up to date is that? And where does the data come from?
This data, we're going primarily to the property websites for this, and we're updating every week.
Is that what people would call scraping?
Yeah, it's scraping. You know, the polite term for it is data mining, right?
Mining. Okay, sorry.
Scraping or mining, but I mean, what we're basically doing, we found that there are infinite many property websites out there, but there are only a few major property management software products. And what they do is they feed data in a consistent way. So there's Yardi, there's RealPage, Entrata, Rent Manager. I mean, you guys know all the different, but they feed data to the property websites the same way every time. So what we did, we built scrapers that know, hey, look for this format of data.
Miners, Mark, miners.
Yeah, we built miners, diligent miners of data that sit there and they just wait for data to be updated in the same format every time.
So that is almost real time, is what you're saying. Because the other part of that question that Henry had was, how often does it get updated? Can you click on one of these properties and show that graph where you can see it over time, what the rent was on the?
Yeah, so we update this every week here, and you can see here we're interpolating between the weeks. So this is like from 2017 all the way up to, you know, present.
The different colors are for the 1-bedroom, 2-bedroom, and the studio looks like, right?
Right. And in this case, we may have not gotten the most recent data point, maybe a few months old at this point, or my graph may be a little bit skewed here.
But this is for an individual property. But I would assume if you're analyzing a property and it pulls up the market rent for a 2-bedroom, all of that, those random incidents, they even out, I would assume.
Oh yeah, so it's taking stuff up to, we run it over the entire database. It's automated, so we don't have to like click or you know, instruct it to do anything. It just runs over the entire database every week. Every 7 days it restarts and pulls everything that's on the websites, whether it's updated or not. So sometimes, you know, you'll see flat periods here where it hasn't changed in a few weeks, and then it changes again. This is kind of a rolling average of the price of all the units that are studio units for the building.
Good. Okay. Yeah, I think that that answers that pretty thoroughly. Does anybody else have any questions for Mark? We're doing very good on time. I see. We always try to keep it to an hour because we know, you know, it's getting late and people have other things to do as well. So who else has any questions? And if nobody has any more questions, then I think Ryder has a few housekeeping announcements. And then everybody can be on their way. So any more questions? Going once, going twice. Oh, there we are. This is a feature request from Henry again. Is there a way to suggest the cap rate based on A, B, C class and value add? Actually, I think I know the answer to that one, and that is that it already looks at the cap rate based on the class of property that it has and the amenities it has and its age and all that. But I'll leave it to you to formally answer that one, Mark, because one of the two of us is the CEO of Enodo and not me. So the question is feature request. Is there a way to suggest cap rate based on A, B, C class and value add?
Yeah, so we do use the information from the property. For its rents and expenses are certainly correlated with its cap rate and its location as well, its physical condition and amenities. We don't have it broken out to A, B, and C class because those things are kind of nebulous and have slightly different conditions.
They're total broker speak. You know, because I had an interview with a property management company earlier this week, and they said, would you consider your class a B class or property a B class or C class property? And I told them, if I buy a property, I consider it a C class. And if I am selling it, I consider it a B minus or a C plus.
Yeah, right.
You know, so it's those terms. So just to get back to the question, so those terms, even though, you know, they give you a good general idea, what Enodo does is actually way more precise. It looks at all the different property characteristics and then determines what the cap rate is that goes with those characteristics in that market.
Right. And I will say, I mean, to be honest, you guys, sometimes this skews in major metro areas. This will skew toward the bigger, nicer properties, just because that's where the data is most prevalent. So if you're going into a tertiary market, looking at class C, C minus type properties, you know, take it with a grain of salt. You know, if it's saying a low cap rate, you're like, wait a second, I think this is a 9 cap. Okay, you're probably right in those tertiary markets. Just because it's a limitation of the data. But yes, we are controlling for all of that in the data that we do have. and we are giving you the most accurate cap rate that our machine learning models can produce.
Yep. Okay, I think that was our last question. Do you want to take us out, Ryder?
Great. And Mark, if people are interested in Enodo, what should they do next?
Yeah, guys go to enodoinc.com, enodoinc.com. I encourage you guys to try it for free. I mean, it's right dead center there. Like, you can try it. We're not one of those companies that wants to say, oh, you got to pay, 20 grand to try it for a year if you want to look at it. Like, try it. Let us know what you think. Let us know if you have questions. There's always a chat box in the upper right or lower right of the screen, depending on which screen you're on. You could reach out to us with any questions at all. And we hope you'll sign up, and we hope that this could be a really big part of your underwriting process.
So if anybody does sign up, is there anything special you can do for them? I mean, just for our VIG members?
Yeah, I can do that. Okay,
I know we had not talked about that. The thing that we did talk about, and I talk about that with all the presenters, is to make sure that the presentation doesn't evolve into one big sales demo. But I don't think, we had to worry about that. I think this was all great stuff. But now I'm actually worried that we're not doing enough to to highlight this to our members. And like I said, if you have anything special that you can help pull people over the line to get a subscription, because this is a subscription-based model. It's all online, and I know all this because, like I said before, I use this myself. So is there anything you think you can do for our VIG members to sweeten the pot?
Well, so look, I've worked with a bunch of syndicators before and offered different discounts for their educational courses and whatnot. I can do, like an 80% off thing. I'm actually fine with that because, I am confident that the people that sign up for it will be long-term users here. Mm-hmm. Why don't I do this? Why don't I get like a discount code? I'll send it over to you guys, to you, Chris. I'll email it to you, and you can share it with the group here. And that way you're paying only 20% of the market price. And, it's a small group, so it's not like we're losing anything really. I mean, people are getting a good deal, but we're also getting people that will convert to longer-term customers. And my way of looking at it is, it's discounted up front because if it helps you build your business as real estate professionals, you'll have tons of users on this. Like, your analysts will be using it down the road, and then it's a lot more revenue for us in the future. And it doesn't cost either of us a whole lot up front, and then down the road, it helps both of us a whole lot. So let me send over a discount code to you.
That is great. And I will share that with our VIG members. And then again, everyone, that is an 80% discount. And let me guarantee you, if you buy one single property, you will not even think about that subscription price. If you plan to just mess around on the internet and dream about property buying, this is not for you. This tool, even at 80% off, it's still going to cost you, a good couple of $100. However, if you're serious about buying an apartment building, and this, would sway you to maybe not do it, I would doubt that you are very serious to begin with. That makes sense.
That's an awesome deal, though. That's an insane discount. So I know I'm going to be signing up at least one there. So I hope everybody will take advantage of this. Cool. Absolutely. Thanks so much. Really appreciate that.
Good guys having me. Take care. I'll follow up in the email and send it to you shortly, and then go from there.
Okay, cool. Ryder, do we have any other announcements?
A couple of announcements. So for those of us that have been in the Bay Area real estate for a while, where most of us are familiar with the Bay Area Summit, Jay Martin puts on every year. This is his 5th year. I think I've gone 4 out of the last 5 years at least. And I don't go to that many real estate conferences, but I never miss this one. I think Chris is the same way. It's so good. It's for networking primarily, but there's also a ton of great content. I've made so many good connections from this event alone. So I definitely recommend it. Jay has been nice enough to give us a nice promo code for the group. It's $20 off. Just go to, let's see, let me share my screen. So it is sfbsummit.com. You can get more information on it. It's in Oakland, February 8th through the 9th, just a couple of months away. So you want to go ahead and get your ticket because it does usually, I think, sell out.
Yeah, and also the prices, the discounted early bird prices that you have now, those prices will go up through the months. And I also find that once I've paid money for something and I've got it on my calendar, the chances that, I will not make up any excuses and I'll actually do what I should be doing, they go up by quite a bit. So on top of that early bird pricing, we have a discount code.
Yep. So if you wait, it's going to be $5.95. If you go ahead and pull the trigger and commit, it's $3.55 for the 2-day. And with our promo code VIGSF, you get $20 off. So that's like the best you're going to get. That's it. So, please check it out. At least learn more. It might be a good fit for you. Otherwise, this is our last event for the year. So everyone have a wonderful holiday season, and we will see you in the new year. Thank you. Have a good one.
Thanks,
Bye.
everyone. See you next year.